Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Devina Khanna and you're watching Indian Open. Let's go straight to the headlines. Federal Reserve policy makers expect to stop the balance sheet unwinding in 2019, but the FOMC minutes suggest that they're not inclined to cut interest rates. The government will infuse over 48,000 crores into 12 state-owned banks to ensure they remain well capitalized. This will help Allahabad Bank and Corporation Bank come out of the PCA framework. The board of Tech Mahindra will consider its first ever share buyback today. And the Kalyani Group is hoping to foray into jet turbo engine and drone manufacturing, says Chairman Baba Kalyani to Bloomberg Quint. All right, and before we go any further, let's quickly take a look at what the trade setup looks like today. So it was a crucial day yesterday for global markets, and particularly in the US, because they awaited the FOMC minutes that came out in response to what they did in the month of January, where they pressed pause button on further rate hikes. And as to more clarity on how long will this prolong to and what exactly was the rationale behind that pause. So the minutes suggested that the Fed is taking a patient stand in response to the steep market sell-off, as well as the overall global economic slowdown. It's going to be more data dependent. The patient posture will allow them for a clearer picture of the international trade policy situation, as well as the state of the global economy before they take further action going forward. The financial markets also saw a slight bit of a thin trade ahead of these minutes, but remember, there is still some participants that left the possibility of a rise in rates in 2019. They've already taken 4 hikes in 2018, and we're going to wait and watch as to what they do in 2019. The other important aspect is what they do to the balance sheet side, because for the first time they actually released a separate statement on the balance sheet. They said that the balance sheet normalization process should continue in a way that it supports the achievement of the Fed's dual mandate goals of maximum employment and price stability. That's on the FOMC. And what happens to the US market? Fairly subdued, slightly more positive. So you've got 0.2% on the S&P 500, Dow Jones, Nasdaq. But remember, US markets since December have already been running up pretty steadily. Almost 18% since December is what you've got in terms of the US market move on the upside. And S&P 500 in particular, has been showing a lot of strength. It has moved past all of its short-term moving averages. Even some technical experts believe that since the RSI has turned in favor, you may actually see some bit of positive momentum kicker for S&P. Asia is a pocket too in today's session. Trades more mixed bag. So you've got the Nikkei 225, which is down about 0.1%, flat for Hang Seng, no cues there, and Shanghai 2 trading flat to marginally lower. SGX Nifty, a quick look at what we're up to, down about 0.33% after yesterday's momentous move that we saw in the second half of trade, more than 1% on the Nifty. Right now, SGX trading at 10,730. Other cues in terms of what's happening in the commodity space. So gold requires focus. It's at a 10-month high, 1338 now on gold futures. That's an interesting aspect to watch out for from the commodity space. Along with that, even crude oil. Now, Brent crude recently made its 2019 highs, come off there, but still trading around those levels of 66.83. Saudi Arabia pressurizing OPEC to limit supply is what is causing the stir on the prices for Brent crude. Aside from that, let's take a look at what happened in terms of the fund flow activity yesterday. So you saw buying activity both on the FII side as well as for DIIs, 713 odd crores, nothing compared to what they sold the previous day of closer to 1250 crores, but still a green number there. DIIs buying marginal 113 odd crores. In terms of the futures and options setup, like we highlighted, the original maximum open interest on the downside, which is related to the support levels, was at 10,700. That has shifted lower now, and the maximum put open interest moves lower to 10,400. Stocks to watch out for then, and you've got 12 public sector banks that are going to get some fund infusion of over 48,000 odd crores. This is definitely going to help Allahabad Bank and Corporation Bank to move out of the PCA framework. Bank of Maharashtra, Bank of India, these also, were out of the PCA framework to meet regulatory requirements. And overall, this presents a pretty optimistic picture, and it will help maintain the capital requirements so that these banks are further not constrained in order for growth and move into the PCA framework. So it will help them stay buoyant. The other stock to watch out for, aside from these PSU banks, is going to be Mahindra Cie. The reported numbers, EBITDA was up 17%. Margins expanded 11.3% from 10.6%. But there was a net loss number of 89 odd crores. This was on the back of an exceptional item of 129 crores, which led to the loss. It was a write-off of the investment in international subsidiaries. JSW Steel, Moody's has revised its outlook to positive from stable, citing an improvement in the credit situation. They affirmed the BB2 rating for corporate family rating and senior unsecured notes. Bank of Baroda, Dena Bank, Vijaya Bank, March 11, that's the record date for the merger, so you're going to be watching out for that. And last but not the least, Dr. Reddy's. They've gone and launched Suboxone, so that's going to be an important watch in today's session as well. But moving on, today on First Word, we'll take you through the headlines. And Akurun sums up the two main takeaways from the minutes of the FOMC. We also speak to Hao Zhou of Commerzbank to find out what the markets should make out of it. Next, Nikunj Ori takes us through the list of 12 banks and how much they get from the government as part of the latest capital infusion drive. The Nifty 50 is set for a rejig at the end of this month. I'll take you through the possible inclusions and exclusions that could happen. And Agam Vakil steps in to tell us just how much cash is lying with Tech Mahindra as the board considers a share buyback. All right, Federal Reserve policymakers expect to wind up the balance sheet roll-off in 2019 amid worries that it's hurting the economy. But the FOMC minutes suggest that the debate is still focused on whether to hike interest rates or not. There's still no talk of a rate cut. Bloomberg's Enda Kurin sums up this report.
There are two key takeaways, like you were outlining there. On the one side, we certainly got clarity on the balance sheet side of things, and that is that the runoff is going to end this year. That will be comfort to those who feel that the balance sheet tightening, or quantitative tightening, so to speak, has been hurting the economy. Of course, people like Bill Dudley would argue that it hasn't had much of an impact on markets, but nonetheless, it will help lift sentiment. Now, on the rate side of things, it was probably much less clarity there. Our colleagues in Washington were reporting that the signals from the Fed were that there may well be another rate hike left in the system just yet. At the very least, they're certainly not talking about cutting interest rates. They are keeping an eye on the global horizon. They are seeing what's happening in China. They are looking at the slowdown in Europe and the complications around Brexit. And of course, they're looking at their own fiscal stimulus coming off. But at the same time, the minutes did not categorically rule out a further rate hike. And I think for that reason, there was a view among some economists that the debate is about whether to hike next rather than whether to cut.
Hao Zhou, Senior Director and Emerging Market Economist at Commerzbank, is joining us from Singapore. Thanks very much for taking out the time. So two important points, one on the interest rates as well as the other. For the first time, them coming out with a statement with regards to the balance sheet. Now, what did you make out of the fact that, they've actually, left room for at least one other rate hike in 2019?
In the first place, we don't forecast any rate hike for the U.S. This year. I think this is somehow different from the market consensus view at this moment. But I think if I read the minutes yesterday, actually the most important thing is that the Fed has become much more dovish than it was actually in the past few months. They have cited the global economic slowdown and the financial risks as a reason to see that why they can't continue to follow the previous dovish kind of course. But on the other hand, I have to say that this is the minutes for the last month. So basically, we have to be a little bit kind of forward-looking. Looks like the recent economic indicator as well as the financial market performance has looked relatively solid. So basically, I think even though the Fed could sound a little bit more dovish for now, but the market could also price in a higher possibility of higher interest rates going forward. So I think this kind of communication between the markets and the central bank will continue. To some extent, the fight continue. On the other hand, I think as a result, the market volatility will be rising in tandem as well.
But what about the data points that we're getting from the U.S.? Retail sales and industrial production data were below economists' projections, and a continuous rise in initial jobless claims. Now, is that going to be crucial in terms of a weigh in policy decisions?
I think, in general, if you read the U.S. data, actually it's kind of very, very complicated and also somehow, self-defeating. In general, we see that some of the activity data looks relatively weak. I think not that weak, relatively weak. But on the other hand, job market look quite solid. So I think, for the Fed, it's a very difficult job for now. Maybe they can say that, the inflation is the reason, why they can't, hike so quickly, because the inflation figures actually were a little bit kind of below the target. But on the other hand, the job market looks like, will create pressure for them as well. So I think at the end of the day, Fed has to be data dependent. And on the other hand, actually, it means that they also have little clue about, future interest rate path going forward. As I said earlier, volatilities, uncertainty, and uncertainties are the key theme for now.
What did you make of, their balance sheet statement that they put out for the first time this time around, and talking about the end of the balance sheet roll-off by 2019?
Well, I don't think this is a quite important statement. Actually, the most important thing is that the risk appetite across the financial markets, to be honest, the Fed can express this kind of dovish signals by saying that they will not wind down the balance sheet anymore. But the most important thing is that the market look at two things. One is the economic indicators, and the other thing is corporate earnings. So what we have seen is that the economic indicators is kind of mixed, but the corporate earnings is relatively soft. So I think for the markets, on one hand, you could say a dovish Fed is good for the markets in general, but also you have to say that a dovish Fed also means that the global economic slowdown might be a bigger risk in the future. So I do think that at the end of the day, balance sheet, the statement about balance sheet is kind of neutral to the markets, as if we have to come up with a conclusion.
No, but just that this was an overhang because it raised questions on liquidity conditions, and now that this has come about, this probably gives a little bit of a relief, because the U.S. markets up until now have not actually had any prolonged period where money is not easily and cheaply available to them, and this actually could have turned things around and made it slightly more difficult, but now they've said that the roll-off is going to end by 2019. Just from a market standpoint, we've already seen U.S. markets rally about 18% since end of December. You think most of it is already built in with regards to the commentary that came in the month of January from the Fed, or there is more steam left to go?
I think, in general, there are two things, right? The first thing is that the market rallied because they believe that the Fed has to be dovish because of the data, because of the corporate earnings. And on the other hand, we have to say that if market continue to rally like this, the Fed also has to rethink its position. So it's back and forth stuff. But in general, I have to say that if the Fed become dovish, it means that corporate earnings are under pressure to decline in the future. So basically, the rally could be seen as a recover of the past sell-off. Does not really mean that the market rally will continue forever. In general, I still believe that the risk is actually biased towards both sides of the markets, especially from equity market point of view. So I don't think it's good time to buy. As well as we have to also to see that the more signals and as well as the economic indicators, maybe also the trade talks between China and the U.S. To give us more signals. Right now, I think the risk is quite balanced.
All right, Hao, we leave it at that. Thank you so very much for joining us this morning.
Thank you.
Hao Zhou of Commerzbank there. with the FOMC minutes that came out yesterday. Moving on, the government will infuse a little more than 48,000 crores in 12 public sector banks, most of which are under the Prompt Corrective Action Framework. This takes the total bank recapitalization amount to over 1 lakh crore in this financial year. Nikunj Ohri lists out the banks and the exact quantity or the amount that each of them will be getting from the government.
The government announced capital infusion of little over 48,200 crore rupees in 12 public sector banks, taking the total amount of capital infused in public sector banks to over 1 lakh crore rupees in the current financial year. The two banks that get the most capital in this tranche of capital infusion are Allahabad Bank and Corporation Bank, who have received 6,900 crore rupees and 9,100 crore rupees respectively, helping them in coming out of the RBI's PCA Prompt Corrective Action Framework. The four broad objectives of this capital infusion are firstly the one that helps these two better performing public sector banks, that is Allahabad Bank and Corporation Bank, to come out of the RBI's PCA framework. The second objective is to enable the public sector banks that have recently exited RBI's PCA framework, which are Bank of Maharashtra, Bank of India and Oriental Bank of Commerce, to comply with minimum capital requirements. The third objective of the capital infusion is that this will equip public sector banks that currently do not come under the RBI's PCA framework but are on the verge of coming under RBI's PCA framework to come out of it or stay out of it. The fourth and the last principle or the objective of the capital infusion is that this will enable public sector banks which are under RBI's PCA framework to maintain minimum capital requirements.
All right, we're going to be watching out for all of these public sector banks today and how they react in trade. Moving on, the Nifty 50 is up for a rejig after the last review in January as part of the exercise carried out every 6 months. So which stocks may come in and which may actually exit? Our analysis shows that HPCL may be on its way out and making way for Britannia or Godrej Consumers. Well, let's get into why we say so, and we'll talk a little bit more about the process itself and then tell you why these two are better suited than HPCL. So starting off first, obviously every 6 months there is a rebalancing of the index in order to maintain stability of the index. So it happens at the end of January, that's the period of consideration, and the second period is the end of July, that's 31st of July. So now we've ended the month of January, and Feb end is where you'll probably get the announcement of a rejig on the index. So let's talk about the criteria now as to what makes the cut to come into the index and what doesn't. So I'm going to start off with two major criteria that have been put out by the NSE for a stock which actually makes it into the index. So it has to have a free float market capitalization of at least 1.5 times of the smallest free float market capitalization company that's currently existing on the index. So keeping that in mind, the smallest free float market capitalization company currently on the index is HPCL. The second point being the average impact cost has to be 0.5% or less in the last 6 months period for 90% of the observations of the basket size of 10 crores. Now what this actually means, it just points out to how liquid the stock is, and that for a particular quantity that you want to execute on the particular stock, you don't have to bear a very big cost because of illiquidity in the system. Now, why are we telling you that HPCL is going to move out and Britannia moves in? Let's take a look at the various comparisons on the free float market cap as well as the test that it clears on the impact cost. So HPCL currently has a free float market cap of about 18,020 odd crores. This is the last 6 months average that we're talking about, from end of July last year. So that's one. The two companies that are likely to replace it and have a better market cap more than 1.5 times is Godrej Consumer Products, which is about 29,828 crores, the 6 months average, and Britannia, which is about 36,470 crores on the 6 month average. So Britannia anyways pips over Godrej Consumer Products there, but these are the two likely candidates. With regards to the impact cost test, the last 6 months average has shown that the last average of HPCL on the impact cost has been 0.046%. Bettering that is Godrej Consumer Product with 0.045%. Even still better is Britannia, which is 0.036%. Now, both the criteria, Britannia tends to pip over Godrej Consumer Products, which is why the scales are tilted more in favor of Britannia coming in, replacing HPCL versus Godrej Consumer Properties. Now, what is the impact on Britannia? If at all, it does come into the index, and there is a rebalancing act that has to be done, particularly for index funds. They have to go ahead and replace Britannia, HPCL with Britannia. So there could be an inflow of about 480 odd crores. Britannia could come in with a weightage of about 80 basis points versus HPCL's current weightage in the index of about 40 basis points. So that could be the incremental flow in Britannia. Now, in the past, how has this worked in terms of the pricing activity? Prior to announcement as well as post-announcement, right up until the rebalancing has been done. So the last announcement was Lupin moving out and JSW Steel moving in. Now, when the announcement was made, 1 month prior to that, you had JSW Steel moving up by 15%. In the period once the announcement was made, right up until 26th September, when the actual rebalancing was done, about 9.5% was the price activity on JSW Steel. But that is not the likely case for every rejig that happens. It is purely price performance, also depends upon the fundamentals of the company and the overall market environment at that point in time. So just to give you a backdrop of the other inclusions that have happened on the index, and we start off with stocks like Bajaj Finserv, Grasim, Titan, and that's the kind of pricing activity we've seen. So very muted, but still positive for Bajaj Finserv. Grasim and Titan on the flip side actually declined post announcement of inclusion on the index. Bajaj Finance, HPCL and UPL were the other announcements that came in. They had a positive return. So prior to the announcement, 1 month prior to the announcement, Bajaj Finance moved up 12.5%. HPCL moved up 23%, but that reversed once between the period of announcement and rebalancing, and UPL did not have a great luck in terms of pricing activity on the upside when the announcement was made. So it's not to say that you will see a positive price action on a stock that is likely to be included, but just to give you a clearer picture of how pricing action has happened in the past. But that's what it is like in terms of the possibility of a Nifty rejig. Moving on, another stock in focus, Tech Mahindra. The board will meet today to consider the company's first ever buyback. But how much equity can the software giant afford to buy back from the shareholders? Agam Vakil, he's done the math and he's arrived at some estimates. Agam, what can shareholders look forward to?
Well, at this point in time, as you already mentioned, it's going to be Tech Mahindra's first buyback, and it's going to be a very important one considering the other four companies on the Nifty 50, well, all have given buybacks, and kind of some of them have actually repeated a buyback. So I reckon some shareholders probably expect something out of Tech Mahindra too. So I'm going to take you through what we can expect. But let's start by talking about the kind of cash it has on its books. That's come on a net basis. It has around 6,520 odd crores, and of course, shareholders' equity currently stands at around 21,300 crores. This is of course including non-controlling interests as well. Now, based on that, we want to take a look at the kind or the amount of quantity that can be bought back. Now, up to 10% of the shareholders' equity, the company will not need a shareholders' approval. So based on, say, something like a 5% or 10%, it could be to the amount of around 1,000 crores to about 2,100 crores. But moving on, anywhere between 10 to 25%, of course, the company will need shareholders' approval, but under different scenarios, it could move up as high as 5,327 odd crores. So it could be a minimum, perhaps, of around 1,000 crores and a maximum of as much as 5,320 odd crores. But that said, if the buyback comes through at various price points, currently Tech Mahindra trades at somewhere around 800 rupees per share, at a 6.3% premium to the current market price at around 850 rupees per share. These are the various scenarios under which your shareholders' equity is bought back. Based on that, I could actually point out just maybe one or two. So at 10%, something around at 850 rupees per share, it can buy back as much as 2.6% equity. Of course, this is all based on assumptions, and these are the assumed prices at which that buyback can happen. And at around 1,000 rupees per share, again at 10%, it would be around 2.2% equity. And I'm going to go to the maximum then once again. at 25% of the shareholders' equity at around 850 rupees per share, at 6.4% can be bought back. And this perhaps is the most in this particular table. And at 1,000 rupees per share, it would still amount to around 5.5%. So, well, of course, once again, I do need the viewers to know that this is just a scenario analysis. This is just a projection. And a lot will depend on the price at which it is bought back and also the quantity and the percentage of the shareholders' equity at which the buyback will take place. That said, it is going to be Tech Mahindra's first buyback, so we expect it to be a bumper one.
And in the past, mainly these large cap IT buybacks have always had a 100% acceptance ratio, be it TCS, be it Infosys, HCL Tech, aside from an emphasis and their buyback ratio coming significantly lower. But the larger ones, they all had a 100% hit.
Yes, so when it comes to entitlement and acceptance ratios, it will depend on how your bids are come through based on HNIs and your institutions along with the other shareholders. But yes, acceptance has been extremely high for the big companies.
Also gives you an idea as to why would people go ahead and tender in a buyback if the company is so solid and you know your long-term prospects of the company are so strong. You wouldn't want to tender the shares. You would rather want to have it in your portfolio as a longer-term holding. So,
Devina, a buyback is also a way by which you can give back some amount of cash to the shareholders. So when you're actually buying a certain amount of shares for a considerable premium, it's just another way of paying out dividends without paying the dividend tax there.
Yeah, no. Obviously, it makes sense for somebody who's actually just entering the trade for entering it, but someone who already has the stock in their portfolio since some time, it doesn't make sense for them to tender it because they're in it for the long run.
Well, again, it depends from person to person and a buyback to buyback because, again, a lot of retail investors did tender in their shares for TCS, the long-term investors who had held. At the end of the day, if you're going to be able to buy back just about 1 or 2 shares or tender in 1 or 2 shares in comparison to 10, well, some shareholders would be happy to give it in and perhaps wait for a little more correction before they move back into
and get that extra buck.
Yes.
All right, Agam, thanks a lot for that. Well, that's all we have on First Word today, but there's lots more lined up on Indian Open. We discussed the latest PSU Bank recapitalization with the management of Syndicate Bank. We also chat with Baba Kalyani on his group strategy, which now includes making jet engines and drones. And then discuss Ashok Leyland's new line of medium-sized trucks with CFO Gopal Mahadevan. But after this break, we'll take a full tilt towards day trade.
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time. Welcome back to Indian Open. Let's see how the Asian markets are faring at this point of time. Most of the Asian markets at this point of time are trading absolutely flat in trade. You're looking at the Nikkei, which is down absolutely, which is actually flat in trade. The other markets, Hong Kong, Shanghai, also trading absolutely flat. The SGX Nifty, after a monster rally yesterday of almost 135 points, has managed to cool off by 36 points, but we are still above the 10,700 mark in trade. Okay, that was the setup, but what's happening as far as the derivative space is concerned? Agam Vakil is standing by with all the setup. Agam, what's exactly happening?
Right. So, well, I'm going to start off with the Nifty. We've seen a little bit of a rebound after 8 straight days of losses, and the Nifty showing strength, moving up by as much as 1.5%, or rather 1.2% to be precise. Open interest has surged by as much as 2%, so there were actually longs building in. But that wasn't the case for the Nifty Bank, where we actually saw about a short covering with open interest declining by as much as 10%. Let's talk about the India Volatility Index first and take a look where that's actually gone off as well, well below the mark of 18, and well, that's 17, still not out of the woods yet, but well, much lower than what it used to be. In terms of open interest distribution, writing around the 11,000 call, that continues. And in terms of the lower end puts, we've seen about 10,400 and 10,700 puts, with the one with significant amount of open interest there. But moving on to your open interest change, where we are seeing a little more writing at around the 10,600 and the 10,700 puts. And when it comes to your Nifty put call ratio, again, it's actually okay, we need a correction here, but the Nifty put call ratio has moved up to around 1.3, and it's the same for the Bank Nifty put call ratio as well. Among stocks which are in the F&O ban, Adani Enterprises, IDBI Bank and Jet Airways. We also have Reliance Power, PC Jeweler and Reliance Infra. 2 more stocks in the F&O ban now. Again, these are not the correct ones, but Kaveri Seed Company has moved into the F&O ban, and we have 1 more ADAG stock, so we'll be watching out for that. I'm also keeping an eye on Jubilant FoodWorks, along with something like a Petronet LNG. And in terms of unwinding, I'm going to be keeping an eye on something like an ITC, Infosys and Century Textiles. So we'll be watching out for those as we move into trade today.
All right, Agam, thanks very much for that. That's the F&O wrap out as to what happened in yesterday's session and how we set up the trade today. Let's bring in, Siddhartha Khemka. He's joining in right now. He's the Vice President and Head of Research at Motilal Oswal, who's joining us on the show. Siddhartha, a quick word before we go ahead and get the management of Syndicate on the recapitalization that has happened from the government, over 48,000 crores that have been given to 12 public sector banks. Now, how positive is this according to you?
Yeah, Divya, good morning. Good morning to everyone. So this is a positive development in line with what the government had been highlighting about helping the PCA banks. So what we see is that the PCA banks remain the biggest beneficiaries yet again from the government's recapitalization. So it will be a momentarily positive for these banks. Some of these who are getting the larger pie of the share will be able to come out of the PCA framework, and 2 of the banks which are out of the PCA framework would the capital infusion will help them to remain at such levels. So overall, our view is that these are the weaker set of banks. Getting funds from banks from the government means that their capital adequacy is much below they were in the PCA framework. So from a fundamental perspective, does it make a long-term case? Not yet. I would say more of a trading opportunity for today or maybe next 2 days. To play the overall the banking space, we continue to remain positive on the corporate facing banks. And the preferences towards the private banks. If someone has to look at PSUs, the larger PSU banks which have the capital strength, the likes of SBI and BOB, they look much stronger and better players compared to the ones that are receiving these funds.
Sure. We'll come back to you, Siddhartha, on that. But let's bring in a management. Then one of the beneficiaries of the government's bank recapitalization plan will be Syndicate Bank. Since Syndicate is amongst the healthier banks in the list, the hope is that about 1,600 crores of infusion will help the bank remain well capitalized and maybe even help in credit growth. Joining us on the phone line right now from Bangalore is Mr. Mrityunjay Mahapatra. He's the Managing Director and CEO at Syndicate Bank. Mr. Mahapatra, thanks very much for taking out the time. This is obviously a big positive that's come in, but 1,600 crores for you, is that enough?
Yeah, 1,600 crore definitely is adequate. As you can see, 1,600 crore probably is not appearing enough to you because we are amongst the lowest amount that has been received. But the bank is inherently strong, and as a result, we have taken all kind of probable negatives that are likely to happen, like the NCLT recoveries not coming in good numbers, the recovery and upgradation, which has seen some kind of a bottom during the last quarter, because last quarter net our provisioning from the corporate sector was in the negative territory, in the sense that the provision that were required to be made for the new slippages were lower than the recoveries. So I think this is a very positive and proactive step on the part of the government to keep the banks well capitalized, although we were never in the PCA framework. But proactively, some of the banks have been given additional capital so that we remain within the regulatory thresholds.
All right, so this is the primary purpose of this capital infusion. What about growth capital, sir?
Growth capital has also been provided at a moderate growth capital, because the government's design principle has been cleared that the government will support all the public sector banks whenever it is required to remain within the regulatory capital, and government will desire that through operations. As per RBI guideline, operating profit should be the anchor of generating growth capital. So to that extent, some amount of moderate growth capital has also been provided.
Mr. Mahapatra, just a quick question. How will this, affect tier 1 as well as, your provisioning coverage ratio going ahead?
See, if you look at our tier 1, we are already well above the minimum required 7.35% as of the last quarter, when we, after 4 quarters of loss, we declared a profit. In that time, in spite of all our provisioning, we were well above the CET1 ratio. However, this capital infusion will give us the assurance that even if the cycle of recoveries and the cycle of growth doesn't happen, even then we will remain compliant. So to that extent, as I told, we are well within the zone of tolerating any shock that could come in the next quarter. And for our capital to risk-weighted assets ratio, we require around 1,700 crores for a 1% uptick in our listing. So this 1,600 crore will give us an uptick of roughly around 80 to 90 basis points in capital adequacy ratio.
Okay, and so my final question is, do you believe that with this equity infusion that's coming in and the recent resolutions that we've seen in the power and steel sector will actually now help you unlock additional equity capital as well as, deposits or any kind of liquidity that is stuck in the banks?
Yeah, indeed so, because see, the NCLT cases which are nearing resolution or which were waiting for interpretation from the NCLAT or the Supreme Court are likely to move fast forward into resolution, and we are in the banking sector, all of us are expecting that these are likely to be resolved well before the financial year ends. So if these things come out, both in the, as you mentioned, in the 2 sectors, as well as in some other cases which are at the almost at the end state of resolution, I think we will get very positive and beneficial uptick in the capital adequacy as well as release of the capital, which could be for my bank to the extent of 700 to 800 crores.
Okay, Mr. Mahapatra, we leave it at that. Thank you so much for speaking to Bloomberg Quint. And that's watch out for all the PSB banks in trade today, but lots of other stocks that we need to watch out for. There is an interesting note by Goldman Sachs on Page. Page has actually been down almost more than 20-25% in the last few trading sessions. So there is a negative traction that's happening there. Vodafone Idea had an interesting analyst meet yesterday where they spoke about the synergy benefits that will come in. And Mishika is here with all the stocks we need to watch out for. Mishika, so so you need to tell us which are the stocks we need to watch out for.
So the first one, let's start with earnings. There's as Mahindra Cie. Their revenues were up 9.5% and EBITDA was up 17%. Margins were at 11.3% versus 10.6%. They had a net loss of rupees 89.5 crores due to an exceptional loss of rupees 129 crores this quarter. This write-off is in respect of its investment in international subsidiaries. Then we have JSW Steel. Moody's changed its outlook on the company's rating from stable to positive. For Coal India, SEBI relaxes norms for the proposed share buyback of the company. SEBI says transfer to Bharat 22 ETF scheme is a part of the ongoing disinvestment program. Then Bank of Baroda fixes record date of March 11th for amalgamation with Vijaya Bank and Dena Bank with itself. Steenberg India Fund buys 6.3 lakh shares in Wonderla Holidays via block deal. Let's look at what promoters are buying. Apollo Tyres Promoter Group acquires 1.5 lakh shares on February 18th. Suntech Realty Promoter Group acquired 80,000 shares on February 18th. And Future Consumer Promoter acquired 9.52 lakh shares on February 18th.
Okay, so those are the stocks that we need to watch out for. Nikki, the interesting analyst meet that happened between Vodafone Idea, what were the key takeaways?
So management pretty much reiterated that it's going to continue to focus on the synergy gains and it's going to be continuing to create capacity to drive the 4G subscription. But then the analyst also mentioned a point where they suggested that the continues to face challenges in the form of weak operating cash flows along with the operating leverage. Despite the huge fundraise, Vodafone Idea is expected to have only 8 quarters of funding, which means that the net debt to EBITDA ratio is likely to remain steep around that 8.5 kind of levels, which is quite a big level that we're talking about. This ratio will call for desperate need for ARPU accretion over the next 2 years. However, the analyst suggested that the management is pretty optimistic of riding the tide and they maintain the buy rating along with the target price of around 40, which indicates a potential upside of around 20-25% from the current market level.
Okay, so that's interesting. Interesting comments coming in from Vodafone Idea. And finally, after falling so much, I think there's an upgrade that's come in on Page Industries. So it's Goldman Sachs. What do they have to say?
Absolutely. Well, a little bit of a contrarian call considering it's come off as much as 44% from its peak. Goldman Sachs is actually upgraded the stock to buy from neutral, putting a price target of around 23,144. Well, they suggest that at this point in time, the growth potential and the valuations are on the same page. And they're saying that the benefits due to relatively affordable price points and, of course, a very wide distribution network is something that will provide a Page to move forward. That said, they're also suggesting that the company is likely to defend its position as a leader despite intensifying competition around because of their expanding network of stores, as well as not only which are not only larger now, but they also have a formidable presence. And all these factors taken into consideration, Goldman Sachs is now turned positive on Page and thereby putting a considerably higher price target than its current market price.
Okay, so that's Page Industries, and the final stock we need to watch out is Dr. Reddy's, because what has happened is they have relaunched a Suboxone film in the US markets. They've given the release post the court orders that come in. But remember, it's an at-risk launch. That means, any kind of penalty that will come in, Dr. Reddy's will have to bear it. But nevertheless, what has also happened is that Indover has launched an authorized generic and Sandoz has done that. Alvogen has launched it. So now it's already a 4-player market. Morgan Stanley does believe since the $750 million drug, their estimates are close to anywhere between $50 to $70 million annual sales that will come in, considering a 25 to 30% market share and 65 to 70% price erosion that will come in. So Dr. Reddy's definitely will react in the positive today. So Siddhartha, just to come to you on Page Industries, what's gone wrong? It's down significantly. What do you make of it? The clarifications from the management coming in, but the street somehow doesn't seem to believe all that.
Yeah, so as we see across the markets are punishing stocks which are not delivering and are highly valued. So Page was one stock which was consistently delivering until the Q3, where we saw the growth coming off. So Q2 was a blip when we saw the mismatch of the festive season. The expectation was that Q3 will see some kind of growth. So the growth was there, but there was some confusion regarding the accounting standards and the growth becoming optically looking higher. The stock is trading at astronomical high valuations, almost 60 times forward earnings, which was difficult for the market in this environment where the liquidity is dried up, participation has gone off. However, we believe that the page continues to remain a compelling story in the Indian consumer space. Although albeit at a lower pace, the growth is consistent, top line growth of more than 15%, PAT growth of more than 20% for next 2 years. We currently have a neutral rating, but our target price is somewhere above 25,000, so that gives a decent upside after the recent correction. So given the news flows currently, stock may remain volatile, but we definitely believe long-term investors can have a look at the stock. The correction does offer an opportunity for long-term investors to enter the stock.
All right, let's bring in our technical experts as well. Aditya Agarwala is joining in right now with his views and some strategies that we can look at this morning. Aditya, let's start off with the index. Yesterday's move was a big one, an encouraging one nonetheless. What would the trades look like?
So it came after a fall of 8 sessions, continuous decline of 8 sessions. Good part in trade yesterday was it held on to previous day's low and it closed above previous day's high. So that tells me that there's a temporary bottom in place. Index looks a little bullish at the current levels. One can take a long position above 10,740 for targets of 10,780, 10,820. Place a stop at 10,690. Resistances on the upside are at 10,785 and 10,820. On the downside, supports are at 10,690 and 10,640.
Okay, anything, Aditya, that today is actually the weekly expiry for the Nifty as well as the Bank Nifty. Now they've started. Any strategies on that front that you're recommending?
So I would go for a long trade post a pullback rally in last hour of trade that we'd seen in Nifty and Bank Nifty in trade yesterday. That tells me that there's more leg towards this to this rally that started late. Opening trading sessions, ticks are showing we might open slightly flattish to lower. Once rates settle down, probably it will be a good idea to take a long trade in Nifty and Bank Nifty both. 27,000 on the Bank Nifty is acting as a resistance as of now. Once that is taken out in trade today, probably once half an hour trade is done, markets settle down. Above 27,000, Bank Nifty too look goods. It can test levels of 27,150 on the upside.
Let's talk about a few other stocks. In yesterday's session saw a lot many more active names in trade, but anything in particular?
Grasim definitely. So Cement Pack has been showing strength for a few trading sessions. Grasim is one of those stocks which definitely stands out on the charts. One can take a long trade in Grasim at current levels of 730, 731. Targets out here will be 760 and 775. One can put a stop at 710 levels.
Okay. Yesterday's session, and I just want to quickly look at a few stocks that started to move up quite quickly in the last few dying minutes of trade, and one being Indiabulls Housing Finance. Stock was at 645 by the time we shut shop, but it was the move that we saw in the counter in the last dying minutes of trade that was interesting. Aditya, did it come about in terms of any technical indicators that it could have been shown on the upside?
So yes, there are late signs that the stock is making a higher low. So the first time the stock has made a higher low is around 600. The previous low was below 600 levels. And RSI is also moving into the bull territory gradually. Volumes did pick up in late buying momentum that you're talking of in Indiabulls Housing Finance. But I'll closely watch out for yesterday's high, which was around 652, 655. Once that high is taken out, then probably a short covering rally might play out in the stock. Unless that happens, I will not go ahead and take a long trade in Indiabulls.
What's your sense on Page Industries? Is there more potential downside on the counter?
So it's very close to its immediate support levels of 20,400 to about 20,350. But once that is taken out, stock can slide all the way down to about 19,200 to 19,300. So closely watch out for those levels of 20,400, 450. If that is held on, then probably there can be a short covering rally that might come up. But having said that, volumes are pretty high on the declines that we are seeing. So that tells you that there's unwinding that's happening clearly in the stock. Longs are getting profits are being booked on the long. So I would stay away from the stock at the moment. Let the stock settle down. Once the correction is done with, then it could be a good idea to take a look at the stock.
Siddhartha, Khemka, just come in particularly on what we've been seeing in the last few days for some of these housing finance companies is slightly more divergent in terms of the smaller names versus the larger names. So stocks like a Repco Home Finance has been on a continuous downward grind. Canfin Homes just recently saw a slight bit of an uptick in yesterday's session, and Indiabulls Housing too. What is the case for investment in these companies?
Yeah, so the entire housing finance has been going through a big grind after the ILFS case. One is the sharp increase in the cost of borrowings. Some of these, especially the kinds of Repco, who are lending more towards the SME and the self-employed kind of category, which were impacted by the demon, then by the GST, have been continuously seeing a downtick trend because the segment that it provides the lending to. Compared to that, Canfin, which provides mostly to the safer segment, which is the salaried segment, had seen a downtick, but now seeing some resilience. The bigger picture here is that with the banking space, both the corporate as well as the PSU banks now seeing a lot of resolution, wanting to look at growth. Housing finance is a segment which is the safer segment for them to get in, easier for them. The cost of funding for the banks are much lower compared to NBFC. So a lot of competition is expected from the likes of PSU banks and from the likes of the corporate facing banks. So that space continues to remain, looks like under pressure. Again, a case where segment was doing well, valuations were on the much higher side. So we have seen a sharp derating for the bulk of housing finance companies. So I think the bottom is not here there. Someone looking to invest in the space should wait for some more time before much clarity emerges on the growth for the housing finance companies.
What did you make of yesterday? There was this Idea Vodafone annual meet, annual analyst meet that happened. What did you make of the comments that came in?
Yeah, so if you see, basically the capital requirement for some of these are still very high. If you see specifically Vodafone, the challenging environment continues. They need to raise a lot of money. The liquidity is not there. We believe Vodafone Idea require about 600 billion of funds towards your capex, towards spectrum payments, towards external debt servicing. Management plans to raise about 250 billion from rights issue, where the promoter stake would continue, but it will lead to overall dilution of the equity base. So that's an environment where the challenging environment continues. Management sounded confident about the future potential, that they could ride the current tide and they could be on the other side. Looks difficult for me from a retail perspective. That's a sector that one can avoid in the current juncture. Although it looks like the sector is at the bottom of things, the worst is priced in, but I would still stay away. Although we have a buy rating on the stock with a target price of 40, but I would not suggest the stock to retail investors yet.
Okay. Coming right back to you, Siddhartha, in just a few moments. Just moving on to a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Good morning, Devina. So we are tracking Dabur on the charts and a buy signal coming on the back of the stochastics indicator. Let's just try and understand what it is and how do you interpret it. It basically is a momentum oscillator, and it helps measure when a price move is overextended, as it measures the current price relative to the highest highs and lowest lows. How do you interpret it? Overbought is above the levels of 80, oversold is below 20. Any crossover indicates a buy or a sell. In this case, when it comes to Dabur, the lower panel, which is the stochastics panel, you will see that the blue line has crossed above the white line and has given a positive crossover, and most importantly, it has happened below the mark of 30, which is the oversold level. So this is an early buy signal coming in on Dabur. We have seen the price move up in yesterday's day of trade. As you could see, it went up about 1% volumes weren't the highest, by the way, but still the stock managed to move up, and it has been falling for the last several days, and around around the mark of 420, or its previous day's low is where the 100-day moving average is as well, and it has managed to bounce from these levels. The last time that the stochastics indicator gave an early buy signal was back in October. If you could see, the stock was trading very close to the 370 mark. It managed to go up all the way up to 420, and similarly another instance of that is back in August. So an early buy signal is coming in as far as Dabur is concerned.
Yash, what's the success ratio for this indicator?
So Darshan, 3 out of the last 5 times that the indicator has turned positive or has given the early buy signal, it's managed to run up more than 8% over the next 1 month.
Okay, many thanks for that, Yash. But for deeper insight on Indian equities, visit BloombergQuint.com, where we identify technical triggers that have emerged in a specific stock or even a sector, and this happens every day. On today's Bloomberg Edge, we feature Britannia and what's the stability price band and the relative rotation graph charts indicate. That's a big BQ Blue exclusive. So log on to our site and watch what we have written on Britannia. So that's the trend that we are seeing at this point of time. Also, Shrikant Chouhan, Senior Vice President for Technical Research at Kotak Securities, joins us on the show. Good morning, Shrikant. What's the trend? What are you advising your clients to do on the benchmarks at this point of time, and which are the stocks that you're recommending for today?
Good morning, Darshan. See, the way yesterday the market recovered and the way there was like a steep fall in last almost 7-8 days. We are of the view that the market has managed very well above the level of 10,600, and from there it recovered back sharply in yesterday's trading session. So while looking at the overall formation, we are of the view that again the markets are going to retrace or pull its recent losses by at least 200-250 points. So we are of the view that the markets are heading for a minimum 10,850 on the higher side. On immediate basis, 10,790 will be the next resistance to watch out for. And strategy should be to look for adding long position even at current levels, more on dips, with a final stop loss at 10,640. Similarly, for Bank Nifty, the formation is equally similar. There is also, we are seeing some rebound, and there also we are expecting 27,350, which is corresponding to the levels of 10,850 on Nifty.
All right. That's the Nifty and the Nifty bank levels to watch out for. Any individual stocks, Shrikant, that we should keep an eye out on?
Yeah, see, like, because we are expecting market to rebound to important levels and it's a still gap of 150-200 points, we should look for adding those stocks which are part of index. We like HDFC Limited, which yesterday closed at 1870, 1875, with a final stop loss below 1840. We should look for adding HDFC Limited to our trading portfolio, and again we can expect a 1910, 1930 on the high side. The other stock which we like is from PSU Bank. Today there is some news flow for Bank of India, but while looking at its overall formation, I am of the view that on the long-term charts the stock has given bullish divergence, and yesterday the stock was around 80, 85, 82 levels, but in the near term we are expecting 86. In the long run we are again expecting 100 sort of levels. So it's a buy at current price with a final stop loss below 80, and for the day we are expecting 86. For next few days 90-92.
Okay, that's the view that's coming in. Aditya, what's your view on Dabur? The BQ Edge did indicate it's an early buy. What are your charts indicating?
So definitely it's bounced back from its previous support levels of 420. As Yash pointed out, there's a stochastic crossover that has taken place in Dabur. And I would agree that one can take a long position, keeping in mind that I also expect the markets to pull back from current levels. Short-coming rallies expected. So there can be a pullback rally in Dabur as well. One can expect levels of 440 to about 450 in the short term in Dabur.
What about Britannia?
So Britannia definitely has loosened its sheen that was there, but one good part is it's taken support at 78.6% Fibonacci retracement level, which is a good decent support zone for the stock, which was around 27,600, 27,700. From there, stock has managed to bounce back in trade. So I would closely watch out for levels of 2,970 to about 3,000 on the upside. If that is taken out, then I can say that the immediate immediate bottom is in place, and stock can head to levels of 3,200. Till the time it crosses 2,950, 3,000 levels, I still believe that the stock can resume its one more leg of downward trend.
Okay, that's Britannia for you. Watch out for that counter. The other one, and Siddhartha, come in on the entire pocket while we're talking about the FMCG staples. A quick take on counters like GCPL, Britannia, Dabur, HUL, ITC.
Yeah, Devina, so we have seen consumers as a whole, the staples segment now reporting pretty strong numbers on an aggregate basis. There have been some misses here and there, but overall, the overall volume growth is something that has been consistently seen, especially from the market leaders like HULs of the world. GPPL, Godrej Consumer Products especially saw some decline in the volume and a margin hit, which led to the stock falling sharply, because again the entire pack trades at a very high valuation. So if you see, there are selected plays in this space. We like the market leaders like HUL, Britannia and Marico.
Right.
While companies like Dabur, which were reporting slower growth with high valuation, we have a neutral rating.
Okay, we'll come back to you, Siddhartha, in just a few moments. You've got pre-open on your screen there. Nifty 50 opening positive, but these are initial takes, volatile moves, and not going to go and refer to these right now. They'll take some time to consolidate. Individual stocks is what you need to watch out for. Their two pricing activity is slightly fluctuating at this point, but JSW is still doing okay. That's up about 1.7% right now. Moody's has upgraded its stance to positive from stable. You've got SBI, which is up about 1.16%. Yes Bank continues to move up higher, 220 on the stock. That's doing okay. We've got Power Grid at 183, Titan Company at 1,043, Wipro that's up that's moved up as well, about closer to 1% or so. Bajaj Finance at 2,623, that's up about 0.5%. Titan moving up, Sun Pharma moving up. Dr. Reddy's, not a very big bang move for post the launch of Suboxone, at-risk launch of Suboxone, but that's doing fairly okay. Cipla is up about 1/3%. Maruti Suzuki moves up to 1/4% right now. So more gains than losses, but quantum of gains are slightly less. BBCL is down 3.8%. That's the worst performer on the index, followed by Z and Bajaj Auto, which have lost out near 1% apiece, and Bharti Airtel down about 0.5% right now. The currency. Yesterday's session saw strength in the currency, moved slightly higher. Today's session too, marginal strength coming in, I think from 71.1314, it's at 71.08 right now.
Okay, some of the mid caps that need focus. Pull up Oil India, which is showing me a downtick of 5% currently. Shrey Infra is showing me a downtick of 4% currently, and BPCL is showing me a downtick of 3%. Power stock, that is Tata Power, is down 3%. Remember, yesterday Power had a good run. That is down. Page at 20,000 now, so that one is down another, despite the Goldman upgrade that came in. That's not reacting. All the smaller PSU banks are doing well. These are all up to starting ticks, but UCO Bank, Andhra Bank, Central Bank, IOB, Corporation, all 20% up. So there is strong traction. PNB is up 10%, Indian Bank is up 10%. So it's just PSU banks which have reacted. But probably this may just change once, the pre-open settles. So that's the traction that we're seeing. Apart from PSU banks, I can't see any other counters which are moving. Pull up Mahindra Cie, that came out with numbers. Numbers were decent, they were not bad. The loss was on account of write-offs in the international subsidiaries. So that one is down almost 3% in trade. Pull up Vodafone and Idea, and let's see what happened post the analyst meet, whether the analysts have confidence on it or no. No, it continues to move in lower. Wonderla Holidays, Steinberg India Fund bought in 6 lakh shares in trade yesterday, so we need to watch out for that. A big upgrade coming in on Britannia by Credit Suisse. So let's see Britannia if it's managed to hold up in trade today. And CLSA has upgraded Shree Cement, so let's see whether that one is reacting on the positive side. Shree Cement is down in trade today. And finally, Goldman has upgraded Page. It's now momentum versus an upgrade. Let's see whether the upgrade, yes, it's up almost 2.8%. So traction definitely on the positive side, baby.
All right, that's the pre-open for you. A lot of stocks that are active in trade this morning. Aditya, I just want to come back to Britannia. You said to 29.70. I think that's right about where the pre-open is. Would you be a buyer once it opens?
So I would want the stock to trade for 15-20 minutes above 29.70-75 levels. If it does that, yes, I'll go ahead and take a long trade for targets of 3100, 3170 on the upside.
Siddhartha, Khemka, just comment on the auto pack as a whole. Now, slightly more volatile for a counter like Maruti, going to levels of about 73, 7400, coming right back down under 7,000. But the overall business prospects for the industry as a whole, things are starting to turn around slightly on the positive side. But would you be a contrarian and start investing in autos?
Yeah, Devina, so we have been very selective in the entire auto pack. As of now, we prefer the passenger vehicle segment, while we believe that the cycle for the CVs could be on a downtick, which could continue to remain under pressure for some more time. The two-wheelers have their own challenges in terms of volumes and cost. The same challenges are there for Maruti as well, and that is why we are seeing that kind of volatility in the stock price. However, the price gives a comfort at these levels that the long-term story for the Indian passenger vehicle segment continues to be very strong. The business model and the brand that would help them in the overall long term. So while the next quarter results could remain weak, the volumes in the monthly data would be a key monitorable. Below 7,000 levels, we believe one can go. Investors can look at accumulating the stock at the next few months whenever the stock comes down below that.
Okay, pull up BPCL. It's down 3.5%. It's down 11 rupees. Just a clarification here. It goes ex-dividend. The dividend is 11 rupees, and that is what the downtick is showing. So there's nothing wrong that's happened in BPCL. It's just that it's been adjusted for dividend. So that apart from BPCL, which is down 3%, I think the entire index, there's no major loser that's coming in. And JSW Steel is up 1.3%. Shrikant, metal stocks, do you like anything?
All these metal stocks have done really well in last few days, and if you go through with the international indices like Shanghai, Hang Seng, or even Bovespa, they are trading at their immediate highest levels. In fact, in last several days, we have seen a good run up in all these indices, and I think this run up is now catching up from our domestic companies. For JSW Steel especially, the stock was around 270, 275 levels yesterday. It closed higher, and while looking at its overall formation, I'm of the view that it is heading for at least 283, 285 in the near term. And if we see the market is really doing well, and in case if we see the market is somewhere close to 10,900, then we may even expect 295 on the higher side. So it's a buy, JSW Steel, even at current price, with a final stop loss below 270, and we can expect minimum 290 on the higher side. We also like Tata Steel, but it closed higher, so we need to see that how it sustains and how it opens. But these two stocks are really good from the metal space.
Okay. Those are two stocks you need to watch out for from the metal space, according to Shrikant. Siddhartha, just one last question before we let you go. Anything in particular, that you and your team are sanguine about right now from an investment point of view?
Yeah, Devina, one segment and stock that we like is the hospitality sector. It's a mid-cap sector, and the largest player, Indian Hotels. We have been very positive about it for last few months. We recently attended its analyst meet, where the management sounded quite confident on achieving its aspiration 22 targets that they have set. So as part of this program, the management wants to move the EBITDA margin by almost 800 basis points to 25%, which will be supported by the industry tailwinds and cost reduction. So on the if you see the demand supply dynamics for the entire hotel sector has, after a period of 10 years, moved towards excessive demand and lower supply, which is leading to the improvement in average room rates. We have already seen room rates increased by almost 5 to 6% for Indian hotels. So the top line growth would be in the range of 15%, mainly driven by ARRs and some capacity addition. However, the margin improvement, as we know that the hotel sector is mostly fixed cost models, there will be a huge operating leverage, and hence we believe we expect a 25% CAGR growth in EBITDA and almost 35% growth in net profit over the next few years. So that's a segment which is at the up cycle, should do well over the next 2 to 3 years. So that's Indian Hotel, where we have a buy rating with a target price of almost 190.
Okay, Siddhartha, we leave it at that. Thank you so much for joining us and giving your perspective on the markets. Ravi Sundar Muthukrishnan, Head of Institutional Equity Research at Elara Capital, joins us on the show. Good morning, Ravi. Thank you so much for joining in. What are you advising clients? It's been, except for yesterday's up move of 130 points, I think the mood of the market is really bad. I think people are losing money in mid caps. Only a select few stocks are doing well. What are you advising clients to do in this moment?
So if you look at the market, you've got to put that into two phases, pre-elections and post-elections. I think the pre-election phase is going to be very volatile. These small ups and downs will happen, but by and large, it is going to be a very volatile market. But post the elections, depending on who wins the elections, I think the market will have a different trajectory. So for instance, if one were to believe that NDA will come back to power, my sense the market will really rollick after that. The reason being simple, most of the foundation has been laid today for the NDA government to do very well, but it should something different happen, then you might see the markets reversing a bit. And more than that, it's not about the party in power. I think the fundamentals will start taking over. So earnings might possibly come back, especially in sectors like banks and consumers, after all that allocations they've done in the budget. So my sense is wait till the elections. Post the elections, I think good days for India and the stock market.
So as of now, don't do anything. No even tiny allocations in any of the stocks. You're just saying wait for, because what exactly will happen is ahead of the results, probably the market rally will start. It usually starts ahead of any kind of election, either on the upside or downside. So is there a possibility they might miss the bus?
So if you look at the mid caps, they've been beaten down pretty dramatically. I think the discount now is about 18% to large caps. And in this downturn which happened to the mid caps, most of the quality names have also been beaten down. And my sense is if really people want to enter the market, it is better to enter the quality mid cap space as of now. So we have a lot of stocks where we say that there is a lot of upside available. So mid cap is one space where people can think of entering today, especially the quality mid caps. But and then of course you got to look at the long term. It's not about immediate returns. You got to hold on to those stocks for a year or so to be able to make those returns.
All right, gentlemen, just stay on with us. We're just minutes away from market opening, and we'll tell you all that you need to know to stay ahead in trade today. The government will infuse over 48,000 crore rupees in 12 PSU banks to provide minimum regulatory capital. The infusion will enable Allahabad Bank and Corporation Bank to come out of the PCA framework.
Tech Mahindra would hold its board meet today to consider potential share buyback. The company has cash reserves of worth more than 6,500 crores on its books as of now.
Dr. Reddy's relaunches the generic version of Suboxone film after 2 quarters. The relaunch comes on the heel of a favorable decision by the US Court of Appeals.
Ratings agency Moody changes outlook on JSW Steel rating to positive from stable.
And earnings, Mahindra Cie reports a loss in the December quarter owing to a write-off of its investment in subsidiaries.
And in key bulk deals, promoter Sheela sells a 1.2% stake in Wonderla Holidays for 270 rupees per share, while Steinberg India buys 1.1% stake in the company.
All right, that's all that you need to know as we step into trade this morning. Shrikant, I just want to quickly come in, and we've been on this conversation of some of these, consumer staples and the reaction that they have. We spoke to Aditya about Britannia, but I believe you too have an opinion there.
See, for Britannia, the view is very clear that the stock is like going to spend time between the range of 3,000, 3,200 on the higher side and maybe 28, 29 on the downside, because I'm of the view that the stock is going to spend, going to form triangle sort of formation, and I think already the stock has reached to its lower boundary. Now it is going to rebound to its upper boundary, which is around 3,000 level. So it's a buy at this price.
All right, that's Britannia, which is a buy at this price. Just come to you, Ravi, and while we're just a few minutes away from market opening, I just want to get your perspective on whether or not it's time to look at smaller, broader market stocks, unlike the ones that we've already been looking at, like the quality large caps. And I want to focus on the mid-cap IT pocket.
Yeah, so we came out with a report a couple of days back where we've been bullish on certain IT stocks. Now, what is happening, a couple of things are happening in the IT space. One important thing is the global economy is starting to do well. So that's the first thing. And certain segments or the verticals like BFSI, retail, for instance, in manufacturing, for instance, they're all doing well, excepting for pharma, for instance. And more than that, the technology shift which we talked about is here to stay for the next 2 years at least. Cloud computing and all of that stuff, mobility and all of that stuff. In the context of that, there are certain mid-cap stocks where we think who are specialists in some sub-verticals or doing some unique business propositions are the ones one has to look for. For example, Cyient is a good one to look at. NIT is a good one to look at. LTI is a good one. LTTS is another one. So these 4 stocks we're pretty bullish on as of now in the IT space.
Okay, Ravi. Devina, market about to open.
Well, you've got about 24 seconds left to go for market closing. We'll probably go to our technical experts for their top calls once markets open, because we don't have time for that right now. But pre-open indications absolutely flat on the Nifty. You're going to be watching out closely for what the banks do, and the PSU banks in particular are what's going to gain a lot of attention as we open up for trade this morning. Already pre-open ticks showing a good amount of an uptick in most of those 12 PSUs. But that's how the opening stacks up for you. You've got the Nifty 50, which is flat from pre-open, so 10,740 on the Nifty. Sensex also absolutely flat. No major moves coming there after that big bang move yesterday. For the Bank Nifty, we're up 0.25%. That's closer to 27,000 on the Bank Nifty. Let's quickly look at what the heat map suggests this morning. Mid caps and small caps slightly marginally positive, 0.33% higher on the mid cap 100, and the BSE small cap also doing okay. That's the heat map for you. So more green on the screen this morning. Your top gainer being JSW Steel. You have that Moody's upgrade that's coming in. So it's tossing between an Indiabulls Housing Finance and a JSW Steel. Indiabulls Housing Finance, remember yesterday's session in the last dying minutes of trade, finally shot up 5%. L&T is also doing okay, a heavyweight on the index, so not bad going. Tata Motors up about 0.8%. Tata Steel, SBI, Sun Pharma are all doing well. Dr. Reddy's, no major move coming in on the at-risk launch of the Suboxone drug, so that's up about 0.5%. ICICI Bank, Vedanta, Titan, these are the gains that you've got. Amongst the losers, the biggest loser is a BPCL, but that obviously, like we highlighted, is an adjustment that's coming in, because of which you're seeing the counter move the way it is. Bharti is down 1.5%, Infosys another 1.25%, HPCL, Yes Bank loses out a bit, so opening was slightly more positive at 220. The stocks moved a little lower. TCS, HCL Tech are some of the others you need to watch out for, and Tech Mahindra going to be announcing a buyback today. That's going to be important to keep an eye out on. But what's happening in the broader market, mid-cap space, Darshan, I believe the PSU stocks are what's going to gain a lot of attention today.
Yeah, so the pre-open was indicating a 20% uptake, but that's not exactly happened. What's happened? Corporation Bank is up 17%. That's the only one. Apart from it, IOB is up 9%. United Bank is up 8%. Central Bank is up 6%. Andhra Bank is up 6%. So they've cooled off from the highs of the day. So that's what exactly. But flavor still remains the PSU banking space. MTNL is up 10%. That's a surprise I'm seeing. On the losing end, you have Mahindra Cie, which is reacting negatively to the numbers. There is Oil India, which is down in trade. Couple of the ADAG stocks, Reliance Power, Reliance Infra is down in trade. After a big surge yesterday, Interglobe Aviation has again returned back to the 1100 levels. So there is traction that's happening there. Some of the other counters that need a highlight. Again, I think sugar stocks have managed to do well. Pull up Dhampur, I can see, is up in trade. Pull up Balrampur Chini, that's flat in trade. Dhampur has managed to open in higher, but I think the market has slowly and steadily now moved into the red. Majority even of the Nifty stocks like a Tata Steel, Coal India, all of them have actually moved to the lowest point of the day. So it's clearly
a day where, again, there could be selling pressure after the mammoth rally that we saw.
It's already flattened out. The Nifty is already flattened out. So the initial 1/10% has already been given back. But we'll wait and watch for these prices to consolidate over the morning period. But no big bang moves expected as yet. Just let's get in those top calls. We couldn't manage to get them ahead of opening. But what's your top call for the day going to be?
So I'll go in for a metal pack. That's a Hindustan Zinc. Looks good on the charts. It gave a very good move in trade yesterday and day before. Has taken support at its previous lows of 245 levels. A long trade is advised current levels of 255 for targets of 260, 265. One can place a stop at 250.
Shrikant, what about your top call?
I think, see, we feel index to do well in the near term. I'm going to say next 2 to 3 days of time. Hindustan Lever looks good, which opened around 745, 747 levels. It's a part of index. It was down yesterday. Today it opened higher and it has broken its previous high. So it's a buy at current price with a final stop loss below yesterday's lowest level, which was around 1720, and we can expect 1770 on the higher side for the day.
Ravi, what about some of the themes in the pharma hospital space? Is that something that you are pushing your clients to as, being part of defensives, or that's something that you would avoid?
See, we like hospitals. We like particularly Apollo hospitals for the simple reason that the mature hospitals are beginning to gain more traction and their profitability is now improving. And the new ones which have come up of late, they're also adding to the profitability. So among hospitals, we definitely like Apollo hospitals.
Okay.
In the pharma space, we are right now underweight, but we like some select stocks. So if you look at the pharma, put them into two broad buckets, India focused and the US focused. In the US focused pharma companies still have a pain because competition is still intense. FDA issues are getting resolved, but there is still that lurking problem with FDA issues. When you come to India, the only concern is about the regulatory issues of price control and stuff like that, but the growth is very good. So if I were to select stocks in the pharma space, I would look at stocks which have a presence mostly in India, followed by the rest of the world and less of the US.
Okay.
So in that sense, we like Torrent Pharma as one good company, and IPCA we like. Aurobindo we like because they have a wide product portfolio, and most of their ANDAs are coming to fruition now. And top of that, the recent acquisition they have made is getting to be margin expansion positive. So three stocks. One is Torrent, the second one is IPCA, and the third one is Aurobindo we like.
Okay.
And among hospitals, of course, I said, is Apollo.
Apollo, I think, had a big issue with the pledge share, but I think it's managed to move up in trade today. That's something that's happened. Which are the key couple of, in such volatile markets, some of the key, names that you're pushing to your clients that, these are value buys that you have to start accumulating now?
See, if I were to look at sector by sector, in the banking space, we are asking clients to focus on retail as of now, retail-focused banks. We still don't believe the corporate lenders will start to do well. We have to wait for the elections for that to happen. When you look at the consumer space, the staple space, we like the whole range of stocks out there, starting with Hindustan Unilever, Britannia, Nestle, and in the dairy space, we like Heritage. Okay. We like the staple space primarily because of all the budgetary support which the sector, the rural economy has got in terms of the farm income. It's not only about that income, it's about that tax subsidies, tax rebates, and standard deductions. All of that, we believe, will prop up consumption in rural India and in most parts of urban India as well. What we're seeing, we have done some extensive field studies. We've actually gone to villages to see. There's been a dramatic shift. So I think consumer staples has come to stay. In the consumer discretionary space, we think the low-end items, not the fancy, big, costly items, like, for example, the LEDs, the fans and stuff like that, they will start to do well. So we like Crompton Consumer out there. Pharma, I said what could happen. I gave you some ideas about the IT space. Talking about, let us say, for example, cement. Not much is happening, just for the fact that the cost pressures are coming down, margins are expanding. They have not been able to take price increases. capacity is not coming up in most of the areas in this country. So if I were to select cement, I will go by locational advantages. Okay. So I will probably want to look at cement companies in the central India space, not the southern India.
Okay.
And pan-India, of course.
All right. Quite a lot of interesting ideas there from Ravi. I just want to, before I thank my technical experts, just quickly get in a sense from them. PSUs, some of these PSU banks which have run up in today's session, smaller names, are they tradable?
I would not go ahead and trade them purely because of the fact they open around 15-20%, and from that point of time they tend to give up their gains. That is the order of the day today as well. They've given up from the point where they opened. They are almost given up most of their gains. So I would avoid them. It generally happens that it's a 1 or 2 day of trade and then it gives up its gain. So I would not want to venture into them and burn my fingers. So complete avoid as far as I'm concerned.
All right, Aditya, thanks very much for joining. I really appreciate you taking out the time. Shrikant, oil marketing companies, I mean, now that we're looking at crude oil near its 2019 highs, it definitely going to see an impact on these oil marketing companies. HPBP, IOC?
See, all these stocks are not showing any specific trend. In fact, they are range bound and they are very close to their important resistance area. So it is better to stay away for the time because they are not tradable. But yes, because there is like a rise in crude prices and we are expecting further more rise in the near term, we are of the view that we should look for Reliance Industries, which is around 1237, 1235 levels. From here again the stock can bounce back to the levels of 1255, 1260, and the stop loss is very nearby, like around somewhere close to 1220. We can keep stop loss and we can create some long position in the Reliance.
All right, Shrikant, we leave it at that. Thank you so very much for joining and appreciate you sharing your thoughts with us here on the show. I just want to take a look at what's been happening to Shriram Transport Finance. They've raised about $400 million from the international bond markets at a rate of about 5.7%. The stock can intraday trade about 1.5% higher. Ravi, you think things are changing for some of these NBFCs, and the fact that there were questions raised on whether or not they will be able to tap into the markets to raise funds once again, that seems to have been coming off slightly.
They do have, but I would still wait. I would rather want to play the waiting game because I don't think the margins are going to come back very soon. The growth is not going to come back very soon. I think the private banks in particular are getting very aggressive in the housing finance space. So to that extent, of course, the budget with that crowding in, which is potentially going to happen because of government borrowing, the yields have gone up then. With the 25 bips drop in the rates, it's sort of stabilized there. But I think the cost of borrowing for them is still going to be very elevated. So concerns still exist. But I would like the best names out there. For example, HDFC, I would like amongst the, and of course, Cholamandalam, because of the diversity in their portfolio.
What about the other housing finance companies like an Indiabulls or a Divan?
I would wait.
You would wait, you wouldn't take any kind of bet?
Them as of now. I want some clarity of how they want to shape up their business.
What about Yes Bank? Is there more clarity or are you still uncertain?
Yes Bank, I think most of the troubles are over. The stock should start doing well. And with the new management coming in, and it depends on how we what should I say? It depends on how we tries to shape up the bank moving forward. But I think all in all, there's a lot of positives around that around the bank now. My sense it should do very well in the future. We have a target price of almost about 370. So we as a house are very bullish about the bank.
Anything on the auto space that you're recommending to your client? Most of them are available at 30, 40, 50% cheaper.
Yeah. So if you look at auto, the budget has done it a bit of a favor, for example, especially the two-wheelers, because that 6,000 rupees may not actually help you to buy a two-wheeler though, but sentimentally it's positive for the sector.
Sure.
So we like Hero MotoCorp there. We also like Maruti, not for the budget.
It doesn't deter you that the inventories for these two-wheelers are...
Doesn't matter, they're all short-lived.
Yeah.
We've always believed that, of course, the inventory pile-up happened because of all the concerns they had last year. The insurance was a big concern they had. Plus, the festival season did not really take off the way they expected. I think the inventories would be written off pretty soon. These stocks will start to do well because fundamentally, I think there is a lot in store for these stocks to do well. We like Maruti as a four-wheeler company. We like I said, Hero MotoCorp. We like some of these auto anchors, especially in the battery space and the tire space. We like MRF.
Yeah.
and we like Exide Industries.
Okay, Ravi, thank you so much for spending time and giving us all the perspective on the markets. So we really appreciate it. ILNFS was not the first crisis, and it certainly is not the last. That's the words coming in from Nirmal Jain of IIFL on a special series BQ Conversation. Jain talks about whether the worst is over for Indian NBFCs. Listen into the slice of that conversation.
ILFS, although technically maybe could be an NBFC, but was really more like an infrastructure company and not a proper NBFC the way the other NBFCs are. So no NBFC has defaulted in the last 4-5 months, despite media headlines every week, covering stories, telling, the social media ubbers with all kind of rumors. And even the NBFCs, one or two NBFCs that have been under attack, from media or from the rumor mill, have honored all their commitments. So this goes to the credit of regulators also, because they created a robust framework after 1998 disaster that had happened when many NBFCs went bust together. But after that, I think so. In a way, this is a proof that the regulatory framework is working, and the risk dispersal also, or the risk mitigation also is working. So even if you look at ILFS, there is no large bank or lender that has a large exposure. So there are exposures, but they are all distributed and fragmented, or they are not really concentrated. And that is how, see, in any system, out of 100 entities, 1 or 2 entities can always go bust. You can't have you can't have any economy or any financial system where you say everybody, there'll be no insolvency at all, or there'll be no, everybody will be above, will be foolproof in terms of investment.
But the insolvency or a default of sorts from systemically important organizations like NBFC would have far more repercussions. And,
no doubt about it.
And part 2 of this also would be that while I take on board the point that regulations have probably helped, the easing of the regulations helped tide over the crisis.
No, I'm saying a different thing. I'm saying that the regulatory framework has been robust enough to make sure that no NBFC defaults, 1.
Yes.
And 2, the liquidity tightening. So many times it may not be a solvency issue, but a liquidity issue.
Sure.
There also regulators and banks have stepped in at right time to make sure that liquidity is not tightened because of fear factor. That even though it's like a heart attack in a healthy body, but that shouldn't happen.
But don't you agree, Nirmal, that the fear factor was alive and kicking, and rightly so? I mean, yes, we've gone over the crisis as things stand right now, but it could have worsened if some steps were not taken in time, some choking up was not done, because let's face it, companies themselves said that this is a black swan event.
So yes and no, because you can never have an alternate history. If we had done this, whatever happened, we would never know that.
True.
But to my mind, in India, the media and social media, basically they exaggerate the fear, and something which was a small issue looks like a big issue.
You're calling ILNFS a small issue?
Of course, it's a small issue from the economy's point of view.
Okay.
Because see, ILFS is not that the entire, say, whatever the 1 lakh crore, whatever has gone, is lost or is a scam or a fraud. So it is a situation where your total assets may not meet total liabilities, and all the lenders may have to take some haircut. Okay.
Okay.
Now that situation basically is bound to happen in a large economy like India. So ILFS is neither the first nor the last. But it got exaggerated so that the entire NBFC sector started feeling choked in terms of liquidity, in terms of the rumors and everything. Sometimes what happens that panic, if taken beyond a point, can actually cause a real problem also.
Sure.
We are talking about NBFC sector, and many NBFCs have met the call on them, which have been very large part of their borrowing, right? Even the State Bank of India, 10% of deposit holders say have a run on the bank. It's very difficult to meet the obligation.
Okay.
So in financial world, anywhere, any bank or any large institution, if there is if there's a crisis of confidence and there's a run on the bank or any lending institution, it's difficult for anybody to meet that. That is where the regulator and central bank has to step in and make sure that these kind of crises do not blow up into a more serious than that.
So are we behind that now? Is fresh credit getting created, or are NBFCs still have to?
A few more things happened in last few weeks. One was this entire episode of loan against shares. Another one was the judgment on the Jharkhand SPV of ILFS. So, what happens is that these kind of things can create fresh panic and a different kind of panic. So supposing there's a secured asset in SPV and those cash flows are mortgaged for a particular liability, now I think the judgment of NCLT has questioned that. Now that can cause a fear factor, because then nobody can actually do a secured lending also, because if the unsecured and secured, by some twist of interpretation, if they come on par or even they come close, then that can be a real serious issue. So that caused a fresh new wave of panic. That what will happen, because the SPV of ILFS, the cash flows have not gone to the lenders of that SPV, but there might be. So many times what happens that these kind of things, which in democracy and judiciary where they work independently, it can happen, but they are all part of the game. I think they get resolved over a period of time, either by judgment of a higher court or by law or legal amendments. So nobody, I don't have a crystal ball to tell you that what will happen next 3 to 6 months. Of course
not.
Right?
But do you think that the worst of the crisis is behind us?
I think the worst of the acid test, the trial by fire is behind us.
And you can watch the entire conversation at 10:30 a.m. only on Bloomberg Quint. Let's take a short break right now. On the other side, we will discuss Ashok Leyland's new line of lightweight trucks with CFO Gopal Mahadevan, and then chat with Baba Kalyani on his group strategy, which now includes making jet engines and drones.